What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today, my friends. I hope you had a wonderful day, guys. Today was a really amazing day for us. We were able to catch the high of SPY. We shorted right at the morning. Really nice, solid trade. We also got some Fibonacci pullbacks. I'm going to break it down to you step by step, my friends, today and get you all ready for tomorrow. But essentially here, my friends, we're looking at a very simple way of trading large gaps, news, anything along those lines. I really wanted to walk you through that step by step. All right. So if you're ready, my friends, let's step into the war zone. First and foremost, let's do some shout outs. Nilan, Otis, One Story a Day. What's going on, brother? Trading Wars Army, Miss B, Willard, Jim, Shannon. Welcome to the Trading Wars Army, brother. Good to see you. Anthony, Trading Wars Army, Dr. D, Just Fun, Hillbilly, Wesley, Trading Wars Army, Keith, Trading Wars Army, Lucia, Hater, Deepak, JC, Simone, Trading Wars Army, Blake, Bill, Ian, Trading Wars Army. Good to see you. Good to see you. All right. Kiran, Wesley, Vagabond. What's going on? What's going on? All right, let's get right into it. So first and foremost, let's hit the replay and I'll go ahead and mark the previous day's high. So we have it marked up. Obviously today, guys, there was a large gap up. And, you know, these days with gap ups, we've been seeing a lot of times the gaps have been being filled and there was nothing different today. So I'm going to go ahead and hit the first bar right here on the 3-minute. Boom. So you can see right here, guys, we have a large gap up. All right. So the go-to strategy for me, guys, on any significant type of news or any type of gaps is going to be the opening range breakout and the fibs. So the opening range breakout really allows you to get in and get out very quickly. And what you're trying to do is you have to remember, let's talk about the psychology. So when we gap up, guys, $9 on SPY, obviously some people are going to be extremely happy and some people are going to be extremely frustrated. So the bulls are going to be happy. And a lot of the times with a big gap, you're going to see some profit taking coming in. That's a general thing, because imagine if you held this overnight, how would you feel? And at the same time, we have bears that have to cover. We have panicking. And then we also have new opportunists looking to actually get in on a short play. Okay. So what we do, and what one of my go-to strategies is the opening range breakout. So I always let the first 3-minute bar close. And from there, all I do is I mark the high like this, and I mark the low. So I have it marked out. And the reason is I'm going to let the price action show me which direction to go. I'm not going to be, I don't have a bias. I'm not going to say it has to be long. It has to be short. No, I'm going to let the price action tell me what to do. So I mark the high and the low, and I'm going to go into the Discord right here. I'll walk you through. Very simple day. You could see my 9:38 Eastern, pretty much done with the orb. Okay. So good morning, friends. Gap up, leaning towards the orb. So I let everybody know at 9 o'clock, 6 Pacific, that's what I'm going to do, because I already understood that there was going to be a large gap. 1 minute to go. Be ready. Likely going to try a 3-minute orb. And then we went short at 9:33, 6:33 Pacific. So right here, next candle comes in, we break down. Okay. That's exactly what we want to see. That's clean. That's a very nice and clean breakdown. So what I'll do is I'll put the Fibonacci on the high to the low, and I'll walk you through how I like to scale out. So what I do here, when we get to the 272, that's my first target, then the 50, and I like to scale out on all these levels, okay? And then I leave runners on, all right? So let's go ahead here. So you can see right after that, boom. So right there, guys, that's 10 points. 10 points, $500 a contract. You could be done right there, okay? If you just want to get in and out. But obviously, I like to leave on runners to go for bigger moves, right? Because if you get a big home run, like you'll see today, we come and fill this whole gap, right? We can get 50 points, 100 points, 200 points, right? So that's what we're trying to do as well. So right after that, we got the orb. We went ahead and we switched to the fib. So what are we doing with the fib? Okay, I'll show you guys. So the Fibonacci, the first direction of the day, was that bearish or bullish? Hit me with the 1 of bullish, hit me with the 2 of bearish. Just look at the chart, okay? First 3 candles, it's red. It's going down. So we clearly see the algorithm that started off in the morning is pushing the market down. Okay. So what we're trying to do now is we're trying to say, okay, I'm not going to chase it down here unless you took the orb. Like if you took the orb, you had a good entry, right? But you don't want to come down here and chase. So what we'll do instead, we'll take the Fibonacci and we'll go from high to low. Okay. And what we'll do here is we're just going to focus on the 618. That's it. Okay, so right there, there's the basic. So focus on the 618. So we turn around here, pop right back up. Boom, there's our 618. Stop loss at the high of the day, like I teach you guys right there. Okay, you fill in on the 618, so you allow it to pull back so you can get the puts or you can get the contracts for a cheaper price. Then a little bit of heat, right? There's a little bit of heat on the trade, but then eventually, bam. So that's why I always tell you guys, new traders, keep your stop loss high of the day. Okay, so from here, we actually continuously, so I'll just move over to the 5-minute and I'll just fast forward, fill the whole gap. Okay. Those are 2 A+ trades. The puts on the fib went for 300+% on one day. And that's marvelous. That's exceptional to get on one day. The puts there, 300+% for contracts. We're looking at 40, 50, 60 points. Really, really nice move. And that's it. That's all I want to talk to you guys about today. Nothing fancy, nothing complicated. Do the same thing every single day. Okay. We have some volatility. I hit an orb. All right. Fibs are always going every single day because the risk to reward is always so optimal with a fib. Okay. And let me just go ahead here and I'll just show you the live Fibonacci commentary. And that's it. So you could see here, this was the initial push. 618 fill short, came in at 9:45 Eastern, 6:45 Pacific, right there. Okay. Took a little bit of heat on the play, but eventually got the rollover that we wanted. And that's, guys, that's all trading needs to be. All right. If you hit it off the open, you allow for your runners to go ahead and make you the money. You don't need to overcomplicate it. Let the runners do this job. So sometimes we catch the high or the low of the day right away. And why? Because within the first 1 to 2 hours, there's a 70% chance that the high or low is going to form on average. Okay, so about 70%. So you can see here, the high was formed on the first bar. So if we understand some of these strategies right here, we understand the probability, that's what we play. So again, we had a large gap up, so we want to go ahead and play volatility. So we're looking for the first 3-minute bar to close. We take the breakout of that. If you miss that, no problem. We have the first Fibonacci pullback to the 618, stop at the high of the day for protection, taking us all the way back down into the gap fill. A+ setup. Really, really good today. All right. So go ahead here, guys, and send me some rockets if you hit that, if it was clean, if it was nice. I really think, guys, everything we've been teaching, literally today was the easiest day to apply the concepts. Either your paper trade, small account, whatever, I want you to learn. And today, I think, was the best day to just understand everything coming together. Volatility, gap up, opening range breakout, fibs. Very, very simple. And we also had the gap fill there to kind of guide us along there. Yeah, so the Fibonacci, we're always looking for a continuation of the first leg. If it's down, we continue in that direction, right? So for any of you guys that don't have the book, I strongly recommend that you grab a copy. You know, if you grab a copy of the book, guys, you get 30 days for free in the Discord. So I try to plan it out in a way that it makes sense. Like you get the book, you get the indicators, you get 30 days in the Discord to learn. I think that's the best way. And trust me, a lot of people in the industry have been raising their prices on their rooms and everything like that. And I don't have any plan on raising my prices anytime soon, nor in the new year, because guys, guess what? The economy was going through a recession and people don't have that disposable income like they used to. So I'm not going to go over here and say, hey, you know what? I'm going to go and raise my price and charge everybody X amount of dollars because I don't think it's the right time. I don't think it's fair to people. And at the end of the day, I want to be reasonable and I'm going to keep it reasonable for you guys. Okay. So hit me with a 1 if you think that's a good idea. Right. So in here, this is what I'm trying to get to. Impulsive leg. So I see some questions about the direction. It's always based on the impulsive leg. Impulsive leg is that push, either up or down. If it's up, we go for the bullish fib. If it's down, we go for the bearish fib. Okay, so that's all in there, guys. Trust me, it's a really, really good book. Over 50 charts, 69 pages. My masterpiece, I will say. All right, or you can sign up right here on the main page if you guys are interested. What I want to do right now is I already posted the picks for tomorrow on YouTube. So I've posted the picks, the free ones. So make sure you're subscribed, turn the bell on so you get these notifications. I'm doing free picks on YouTube. For any subscribers, you're going to get it. Okay, so you can follow along with that. All right, so what I want to do now is just go ahead and run the scan and see if we have anything. So from a blue raindrop perspective, I don't see anything, but all of my scans are built through Trendspider. And if you guys already have an account, just email them and let them know you want to join the affiliate and they will hook you up. All right. So let's go ahead here. I don't think there'll be anything because today was such a volatile day. We're not going to have any consolidating patterns. So I don't see anything there. Tradingwars.com, like I said, guys, come trade with us live tomorrow. Golden indicators, make sure you have these. These are the free version. We have the premium ones in the Discord. And yeah, that's pretty much it. I don't want to waste your time. I want to keep it very simple and straightforward. And I'll summarize it one more time. Whenever there's a volatile day, so the way I like to identify that is through a large gap, up or down, doesn't matter. I like to use the opening range breakout off the bat, unless there's something crazy like the candle is too big, then I can't actually trade it because my risk to reward will be bad. So we go for the 3-minute, 5-minute, and 15-minute. So just to walk you guys through that, right? Here's the 3-minute first bar, it's a winner. The 5-minute first bar is a winner. Let's go ahead and look at the 15-minute. That's also a winner. So on all time frames, even on the 15, there was actually a really, really smooth entry because after that first bar, you had an inside bar to confirm and give you an even tighter risk to reward. So look at all the time frames. That's the orb. And then right after that, we go straight into the Fibonacci. Okay. Very simple. All right. Thank you for your time. Enjoy your evening, my friends. I appreciate you. And I really appreciate you being here. So go ahead, leave a comment, like, subscribe. Let's support the movement here. We keep things simple, and making money is really a simple process. It comes down to being following risk management. It comes down to execution. That's really what it is in the long run in trading. All right. Leave a comment. You have a chance to win the giveaways. Do them every single week. Thanks for your time. I appreciate you guys. Take care.